Excuse me. Good evening, everybody. I said I'll stream on Sunday, and today is Sunday. I do have only 36 minutes left of this day, but I want to quickly go through the weekly biases I have for the, I was going to say majority, but the main pairs I'm looking at. I'm expecting bullish from DXY. But just to go over, yesterday we did a study session with Euro USD. We have a notepad, etc. And we took notes on when price moves from consolidation into a move. What was the characteristics of the consolidation, and what was the characteristics of the prerequisites for the move, and what we think was important to know. So that's what we did yesterday. We was going to do study session today, but I came back home, relaxed, was with families, and also that was literally it, basically. I read the book as well. I finished the book in like an hour. It's a very good book. It's called Anything You Want by Derek something. Anyway, I have about 10 minutes stream. Again, I'm going to watch a film with my sister. So I don't think I'll be streaming for too long, but we just want to go through weekly bias anyway. Statistically, we have the Google Sheets. I'm going to reference this. We haven't updated this. We'll update this to 100% this week. I think I will do it tomorrow or Monday. And it's the Google Sheet that goes through past weekly candlesticks, and it goes over when the extreme is made, whether it's the high or the low for the week. If we're bullish, it would be when the low of the week formed, like what day of the week or what day and time is the low formed if we're bullish, and what day / time is the high formed if we're bearish. And that is what I've got here if it wants to open. And the general consensus is by Tuesday 5 o'clock. This would have been New York time. So by midnight Tuesday, was it 5? Yeah, it would have been 5 in the morning, which is, no, sorry, that's 10 a.m. So that's London session. By London session open, we have 81% chance that we've formed the high or low of the week already, meaning that if we're bullish, we're going to be bullish in DXY. So we're going to be bearish on a lot of like pairs that have EU, GU, NZ, DU, SD, for example. We have the high, let's say we're bearish, we have the high will be formed by Tuesday London session. So when I wake up on the Tuesday morning, there's a very low chance that price is going to reverse on this original high. So that is some information we have. Also, we have this, which is by Monday, the end of the month, trading day on Monday, we would have most likely formed the high or low. You can see there's a lot of times where we formed it on a Monday. Like there's a lot of Mondays. So it's a very strong chance that we even form it on a Monday. Now this is old data. It's not including all of these because it's about 37. This is about 50, I think 47. You can see one right says 47. So there is going to be some element on this that is probably going to go down. Now ICT said that his own research, he found it to be this row here to be what was it, 70%. So give or take 10%. We are always above 50 in each section. So with that information, I'm going to form the weekly bias, and we should expect price to move in the opposite direction of where we expect it to go. So starting with DXY, because it covers a multitude of pairs. On the weekly time frame, we have this level here. This orange line is 102 flat. So institutional level, it's a psychological level, and it also happens to line up with this swing high ITH. Why is it ITH? Because on the daily time frame, we have come up into this fair value gap, and it's a swing high that's formed here, and we have not taken out. This was formed in May 12th. We haven't taken out for 2 months. So on the weekly, going back to the weekly, it's a swing high ITH. You can see it's a swing high. It's a major high. It's significant. It's held for a very long time. So there's a lot of strength, especially in the retail. This is a strong area. With institutions, also a strong area because it's 102 flat. That they'll be using these figures whenever they're entering and entering the markets, or using it as reference point to anything they're trying to do. Then we have over here about this 1037 level. We have this 1 weekly fair value gap, which is a target for the bullishness. As you can see with the bearishness, if you look at the overall consensus, You have this high, this low, this high, this low, and we look like we want to come back at the retracement. It is plausible we come into contact with this bullish area here, which is the only bullish candle in this large move here. So this would be a place of institutional order flow, which may incorporate or encourage sells. You then also have a fair value gap above it. So price could go above that too. But this is the low hanging fruit, which would be this fair value gap here, which lines up with the 1-3-7 level. So if we break this 1-2 level, we can expect price to potentially go up here. I am bullish today for this week. And let me show you why. Regarding this week, I'm bullish. So yes, we have our targets. We've established that already, which is what we're just talking about. The 102 flat level and the 1-3-7. 103.7 flat level. So we have a swing low here. Low of these 2 weeks are both higher than this low. So this is now a swing low, with the low being 100.353 right here. What is this low? It is significant because it is within this weekly fair value gap. We're on a weekly time frame. You can see from this high here to that low, we formed this fair value gap, and there's a market gap here too. We filled both of those with the swing low, filling majority of the fair value gap above 50% or below 50%. And now we look to be bullish because we're close to this target. So we've filled the fair value gap. We've also got a liquidity target above. We are just going to be super bullish on dollar, bearish on the pairs that we are going to be looking at. So that's the weekly time frame. And of course, it's just opened this week. So again, we should expect to push downwards before the push upwards, pushing downwards to where it could come in contact with this bearish candle here. There isn't any imbalances here. We also took out this high here. So I do think price will just touch this maybe and then go up from there. I think we're going to be very bullish today, this week. News-wise, we have nothing on Monday. So this could pretty much just start making its move. There'll be a manipulation potentially by Tuesday here, but it's some strong news for the rest of the week, albeit that only 1-2 affects the dollar directly, actually 3, but still there's going to be some interesting pairs there. So with that DXY being bullish, and I'll explain why, we have our targets and we have price action reading for bullishness. If we go to NZD USD, that would then translate to this being bearish. We're on the weekly here. Why are we bearish? Why could we be bearish? What's our bias for NZD USD specifically? Well, for one, we have the high here, low here, high here. This high is lower than this high. And then we are yet to create this low. But more specifically, high here, low here, high here, lower high, and it's confirmed by this lower low right here. So this lower high is lower than this high, and this low is lower than this low. Therefore, we can say that we have some bearishness. We also have liquidity here, which will be a good target if we're going to be bullish for it to take out this liquidity beforehand. So based on this structure here, starting from here, we can say that we are bearish. Then we have the fact that on the weekly, we've taken liquidity being this candle's high and this candle's high. You can maybe argue these are equal highs, and price took that and we're now bearish with the line in alignment with the structure, and the structure showing that we're bearish. We can argue, and I think I am of the opinion that NZD USD is bearish for this week as well. We go down to the daily time frame. You can then see it closer. We come into contact with this bullish candle, which will be an order block because we see this fair value gap here. So coming into contact with it, we never go above halfway. So bring back the drawings. That, well, should we just about go above halfway, but we don't close above anywhere near this order block. And so we come into contact with this order block, and then we can start to see price move downwards. We don't have a weekly fair value gap like that. I mean, we can argue this one here, so that push up into it, you could say, okay, we've done that. This is the daily time frame though. So this daily fair value gap, sorry, not the. However, we did have I think a fair value gap here on this bullish side, and then we turned it into inverse fair value gap. Okay, so we've taken liquidity, we've come into contact with this order block, and we've reacted strongly from this level. We also took liquidity whilst reacting into this order block. So when we take into all this consideration, the bearishness is quite strong. So we take that into the hourly. Let's see what we got. So on the hourly time frame from last week, we had displacement here, taking out these lows, consolidation a little bit, and then move, and now we retraced. And what we retraced into, these fair value gaps. So it's plausible for us to return or retrace from here. I would wait for the time. I want to see price set the high. So the high could be right here. This could be the high, the price, because there's also been occasions where on Sunday we've actually set the high, which is 1 hour, 2 hours after open, which is very plausible, possible. Plausible is more than 50%. Possible is reasons for it to happen. So I was trying to formulate words there. Nevertheless, we're going to wait for this to form as high. How do we know when the high is formed? Well, we don't until the end of the week. So we can take educated guesses, such as time. Time and price is a good one. Then time-wise is by Tuesday, whenever we are, this number, the longer it is in the week, the higher chance we've already formed the high. So it's low chance, probably less than 50% chance we've already formed it. By tomorrow when I wake up, it may be maybe just around 40 to 50%, around kind of that mark. And then obviously by the end of that day, it would have been over 50%. So if we're right about our direction, now the key is you have to be right about direction to even get the day of when the high or low is formed correct. Once you got those two things right, you're good. The way to protect yourself is in your entry model and within your what triggers your entry model. What triggers my entry model is a large liquidity sweep. By large, I mean large in the sense that the area we swept is a significant high or low, meaning that it was either equal lows on the larger time frame, such as the daily, 4-hourly, and above, or could even be something that was maybe an hourly lower time frame, but it was equal highs on a multitude of maybe 3 to 5 plus touches. So that's where I would say significant. So sessions for me are not significant unless it lines up with something else. Sessions on their own are good for continuations, but I wouldn't say it's what my main strategy is personally. Now, I will look for those. I do classify them to an extent as significant, but I found personally so far that it is stronger to anticipate dailies and that sort of liquidity as a bigger, stronger liquidity sweep. Okie. So, enough waffling. What are we here waiting for here? We want price to come up. I think price could potentially even take these highs. I know it's coming up here anyway because it's a fair value gap. We're bearish. We'll just go wait. If we bring back our drawings in, you can see the consolidation, the move, and we're retracing. Funny enough, if you drag this consolidation to the right, from this high to this low, we have pulled back into this optimal trade entry, and the bottom of it, you can even argue, okay, let's say we'll consolidate from here to here. Get this green line for liquidity. You can argue right here, this 7-9 level lines up with the bottom of the consolidation area, and that's where we pull back up to. So this could even be the high, really and truly. I am yet to go into the common patterns within when prices form this high. How do you know? I haven't got that information yet, but I can still be profitable because I can tailor it to suit me. How will I do that? By simply time. We have this. We have the word of ICT saying that by Tuesday London session, you would have found 70% of the time that the high or low is formed. So we will use that as our basis. And this is NZD USD, so this is specific to EU, to be fair. As you can see bottom left, we have the pair that we've used to gather the data on. And then we'll continue this. We want to get 100 every pair. So this has 47, we're going to get 53 more. Then we're going to move on to something like GU, and then gold or something like this. And then we're going to keep extending that, see if there's a clear stark difference, what's the deviation between pairs. And then after a while, we then even go deeper by going back into time even more, and then getting greater stats specific to time. And then we'll now have another sheet where it would, or maybe within the same sheet, we'll have tables referencing blocks of time, because the market will change over time. So if it changes over time and we have maybe for the past 6 months, past 3 months, past month, we're gonna see maybe different trends and then start, going into analytics from then on. So my sister's in downstairs, so I was meant to have a 10-15 minute stream. We've been extended, it seems, so we're gonna go with the flow and just keep flowing. So weekly bias, we've been bearish. Very clear why. We have the structure point and the fact that we've taken this liquidity last week. I think we're going to continue, and then you have to line that up as well with the fact that we literally DXY shows bullishness. We have those two things up, it just screams for the opportunity to sell. So these orange lines, they are lines of institutional interest. So there will be the 8, the 2, the 0 level, 5, even 2, 5. Those are the numbers that institution would use. So you can see this is 182 and 22, which was just us to show what was making price move here, what was it respecting. And the bodies all closed below the 818 level. Can you see body below, body below, body below, body below, body below, body below, body below. All of the bodies are below this one candle here. The wicks, we have 2 equal highs created around that 2 level, just a bit above, a pip and some change. I think it's 1.6 pips. So I'm expecting price to actually drop from here. I actually think this is the high of the week. I'm not certain. It might go up a little bit higher, but I think it's the high of the week because from this range, we have this being optimal trade entry. And then we have the fact that this is the consolidation area. And we also saw that price can retest its consolidation blocks. And then institution can get in at the bottom. And what's funny is that it lines up almost with the one flat. So if I grab one of these, take it to one flat, you can see that's where price currently just so far touched, and it looks like potentially it will drop from. So of high interest indeed. Yes, I am. If we're looking a bit more zoomed in, oh yeah, it does that left, I think, thing. It's just the market gap really. And what's interesting about market gaps, they gotta be filled. So let's make this, make it bullish to be fair. Just keep it blue. Curious to know spreads. This is NZD USD. If in theory I wanted to enter, spreads will actually be fine. I don't see me personally entering this. To be fair though, displacement. And it's taken out the swing low here. The only thing I would say or think about is really take liquidity. I mean, technically took the London liquidity, New York liquidity from last time, which will be last week Friday. So and like I said, significant sessions I want to lose on their own, but this is London and New York's high, and it's the high of, would have been the daily close of yesterday, I think. No, it wouldn't be because that's just the, oh no, it would. So we've actually taken yesterday's liquidity high, which would have been the New York and London session. Yesterday, I mean, but technically Sunday last week. Not Sunday. It's this thing called thingy. So I'll actually be interested in entering this. I wish I had a 10-minute interval. Let me see if it will allow me. It doesn't. So it's only 5 minutes I have access to. I'm gonna get rid of this now that we are live. And what I'm looking for would be a retracement. I would even probably take this bullish candle as the idea, and then it's about when I want my stop loss and my TP. TP I'll probably just set to fill this, and then if we enter on the touch here, treat it as if it's an order block, add the necessary pips for, it'll probably be this type of trade right here. wouldn't put much in that. But that's a decent idea. Cool. G taking interest in London, New York highs as well. Okay, market structure. So we're taking out this swing low here, create a swing high, pushed up, took out all lows, liquidity. This is a swing high, took out that liquidity. We've also created a swing high here, took out this liquidity, and it looks like we're in the displace. The fact that we just created a swing high here, and we have structure on our side too. High, low, lower low created here, and then of course continuation to take out this liquidity will be next. Bring back the drawings. This is the overall target for the next couple of weeks. Obviously, we'll see if that holds true. We have the gap formed from this close to this open. Is that already filled? Pretty much. Took the major liquidity from yesterday, which is London and New York equal highs. Well, not equal highs, sorry. Same high. This is a 4-hour Fair Value Gap. Just make a note of that, so I have to check next time. And price pulls back into it whilst taking liquidity and touching this order block here. Does it close above it? No, it doesn't. Or wick above it, doesn't even wick above it. Taking liquidity, followed by a 5-minute Fair Value Gap, which touch and a retracement could do. Now, the only thing about this is that we've kind of filled all the Fair Value Gap in. So it's like, meh, you know? Normally when you fill more than 50%, or what I've seen so far, when I've filled more than 50%, see what came out to 7-9 level to the T, which lined up exactly at the high of this open and closing candle from last week. And that's what you used to bounce up, taking this liquidity here. This is definitely institutions that are involved. Fair Value Gap here, pull back into it, pushed up, displacement from Fair Value Gap here to here, taking this liquidity. So already see manipulations involved even from this time. So this one I'm less feeling than NZU because NZU has better. It hasn't filled this yet. The only thing I'm seeing right now is where we get entry. The entry we had was over here, but obviously we were not looking. Let me just move on to EU just in case there's an idea here. So we closed down here, opened up here, yet to fill this. The main issue with this is that we haven't taken out the swing low yet. And even though we have this Fair Value Gap, which we did tag back in, it doesn't matter until you take out swing low. So there's nothing really on EU, it's much behind. It did take New York, also didn't take London. So it took out less of significant swing high. Also came up to this area here, which is almost the bottom of this consolidation. This came up to the bottom of this consolidation. So came up close to it. This 4-level flat. Get a line there. And it respected that to the T. Or almost to the T for now. Just not as much liquidity. And we've also seen no strong displacements downwards. Case is interesting. This one's taken Asia and London liquidity low or lows for liquidity. And this moved upwards strongly. So leave that alone. USD CAD. Hasn't been any liquidity sweeps here. This was taking a lot of bearish liquidity. could be bearish. Tagged into this weekly fair value gap. Displacements are present. Check out this swing low. Putting them back up. I would probably from this range. This range right here. After taking the sell side, should expect some movement up. Which candlestick would approve use? Probably this. Might take some liquidity, push up into this fair value gap before it drops. It's not bad. Don't like that. So the only thing I'm looking for tonight is a pullback up here, taking this 1 to 2.567. I've got my alert set. Might even set a limit. Okay, my computer's lagging. Just gonna post this in Telegram. And then that's it for the stream. Appreciate you guys. See you tomorrow. Peace.